I'm Alix Steele. Welcome to Bloomberg Commodities Edge, where we focus on the companies, the physical assets, and the trading behind the hottest commodities with the smartest voices in the business. Let's get right to the data today. We're going to look at the top market stories of the week. So the headline, you get it. Oil inventory numbers drew, refiners are ramping up their runs, and the market is getting really tight. And this is one way to look at it. So this week, WTI December 2021 contracts at its highest premium to December 2022 contracts since they started trading. And this is a favorite trade for some hedge funds to bet on crude. You can see this here and that premium. A couple things going on. Saudi Arabia's energy minister pointing to clear signs of improvement in the demand outlook. It looks like an Iranian nuclear deal is going to get pushed back, and the summer driving season in the U.S. has officially started. Jeff Currie of Goldman says that oil could actually play a little catch-up here with other commodities. So let's get into other commodities. And this chart actually comes from Jeff Currie over at Goldman. So copper price is still trading around $10,000 a ton. The difference is what's leading it. So you take a look at the orange line here, that's China manufacturing PMI, versus the blue line, which is copper prices. The two usually move in tandem, as China's credit impulse has a big effect on commodity prices. We all know that. But the white line now is Western manufacturing PMI, and you can see that recently you've seen that really drive copper prices higher. Part of that story is the recovery, it's vaccinations, it's reopening, and it's also the decarbonization theme. So that leads us to our third chart. One of the reasons why copper does so well is that global pull from decarbonization. So the IEA actually had a report out this week that said the oil and gas industry is set to boost investments in clean energy this year to at least 4% of their capital spend from 1% in 2020. So out of that $1.9 trillion spend, you got the power generation sector is going to spend about $820 billion globally. And a big chunk of that money is also going to wind up going to renewable power here. But a lot more is going to be needed. Yes, it's climbing, but investments need to more than triple this decade to maintain the possibility of limiting warming to 1.5 degrees Celsius. Pretty stark. All right, now let's get into the ring. Cyber attacks versus commodities. First, you got the Colonial Pipeline shut down by an attack. This week, it was JBS Plants, the world's largest meat producer. Michael Chertoff, former U.S. Secretary of Homeland Security, weighed in.
We saw the Colonial Pipeline shut down as a result of a ransomware attack, and those have stepped up. And then we saw the attack against the meat company. We don't quite know yet the nature of the attack, but it required them to shut down their operations. And that shows the extent to which our food supply, our health system, and our energy is dependent on cybersecurity.
And it will be a bumpy ride back for those plants coming back online. Joining me now is Lynn Doan. She heads our commodities team here in the Americas. So, Lynn, to that point, what does coming back online really look like?
Hi, Alex. It's good to be here. Thanks for having me. Well, it's not normal. I can tell you that. We've been talking to sources on a daily basis since this attack happened. And from what we can gather, the plants are reopening, but they're not reopening with all of their digital systems in place. I didn't know this, but apparently even the most basic of processes at a meat plant are now automated. So knife sharpening, the speed at which production lines are moving, that's all done by computer. And without those computers in place, workers are having to do everything manually. One person we spoke with sort of likened it to driving a manual car versus an automatic car. As you can imagine, that's going to weigh on efficiency. It's going to weigh on productivity and supply. So the plants won't really be able to return to a state of normal until these systems are brought back online.
Yeah, you definitely don't want to see me with a manual car. So what does that mean then for the cattle market in that short term until we get back online here?
Yeah, I mean, the market reaction to this attack was swift. I mean, it was first thing on Monday morning when we saw the livestock futures take a dive, and we also saw those downstream agricultural prices like hog futures rally. We've all been waiting for the USDA to tell us how the attack has affected the wholesale prices of pork and beef products. But, you know, it's funny, unfortunately, because JBS controls so much of the meat market in the US, the USDA wasn't able to submit prices and release those for market proprietary reasons. So what we know anecdotally is that the suppliers and the wholesalers in this market are seeing a noticeable rise in prices until those plants are able to come back to normal. It seems like from the people we are talking to inside of those plants that should be something that they'll be able to do in the next few days. So we'll just have to wait and see.
Yeah, I wonder what industry now is going to get hit next. Hey, Lynn, thanks a lot. Really appreciate it. Lynn Doan of Bloomberg. Time now for Commodity in Chief, where we talk to one executive in the commodity world. And today it's Bobby Tudor, chairman of Tudor Pickering Holt and Company. $100 billion. That is how much it would cost to build the world's biggest carbon capture and sequestration project. Here's the pitch. Refineries, petrochemical plants, and industrial facilities emit CO2 during operations. Instead of letting the emissions float into the atmosphere, you collect them as they're released and you pump them back into the ground. Exxon is proposing to build a huge facility on the U.S. Gulf Coast. Now, in 2019, 13 million tons of CO2 were captured in the U.S. With this project, it could be 100 million tons by 2040. That's a 7 times increase. Now, Exxon wouldn't do it alone. It wants to team up with public and private partners. And the world needs those big solutions. There are only about 676 carbon capture products in the world, as tracked by Bloomberg New Energy Finance. Now, new large projects like the one Exxon is proposing are key to lowering the costs, making carbon capture competitive, and legitimizing it as a viable solution to decarbonization. Now, I recently spoke to Bobby Tudor and asked him how important this kind of project could really be.
What's different about Exxon Mobil's project is just the scale. You know, they're talking about something that's $100 billion in capital and 50 plus megatons ultimately of CO2 captured. And to put that in context, it's like taking 15 million automobiles off the road annually. Or it's like planting trees to cover the entire state of California.
So aside from like a boatload of money from the government or something, what are other ways that the industry can make this scalable? What's going to help it?
Well, I think it's going to take a range of financing sources. But one of the things that will really help is ultimately if there's a price on carbon, because in order to drive an ultimate return, the companies involved are going to have to be able to price what is captured and delivered. It's also going to take financing from traditional sources, from banks and the capital markets. But once again, those financing sources will only be interested and available to the degree there's a return associated with it.
How do you make a return in a carbon capture project?
Well, it takes really significant government subsidy, much in the way that in the early days of the wind and solar business in the U.S., where we had really critical mass in that business, the economics of those projects just didn't work.
But down the road, once things become scalable, like how do you make a return? Like, is it farming out the facility to other companies that need to put their carbon back in the ground? Like how do you, like, where does it come from?
Yeah. That's where the return comes from people selling their captured CO2 to a transporter and service company that ultimately disposes of it. And so, but to do that, you have to have a price on what you're selling.
How viable of a solution is that?
The IEA says there is no path to net zero 2050 without carbon capture and sequestration. I think the big kind of open question, though, is the U part of CCUS and the ability to turn this carbon dioxide into usable carbon molecules. There's a lot of really interesting research going on along those lines here in Houston at Rice University. There's a carbon hub project, and the idea is to take that carbon that's been captured and use it to create advanced materials. And so rather than just putting it back in the ground and storing it in a salt cavern, you would actually find alternative uses for it. So it's estimated that to meet the goals of Paris, globally, we need to be spending $3+ trillion a year on this issue. The capital required to do all of this is mind-blowingly large, And the capital markets, notwithstanding green bonds and infrastructure funds and banks, the capital markets are not big enough to fund $2.5 trillion a year for this sector. And so what does that mean? Well, it's going to have to come from sovereign governments. And when you start talking sovereign governments, you start talking taxes. And when you start talking taxes, you start talking consumers. And what tends to be really absent from this whole conversation is what is the appetite of consumers ultimately to fund this transition, which most people would say requires a real sense of urgency and immediacy.
That was my interview with Bobby Tudor, chairman of Tudor Pickering Holt & Company. And since that taping, Exxon did suffer an historic defeat with activist investor Engine Number One winning apparently 3 seats on the oil giant's board, despite Exxon's best efforts to stop it. Exxon will now also have to disclose political and climate lobbying activities despite opposition from existing board of directors. All right, time now for our commodity kicker. It's a move to cut greenhouse gas emissions. Cargill is turning to cow masks. The ag giant will start selling methane-absorbing wearable devices for cows in hopes of turning bovine burps into a more benign emission carbon dioxide. And the mask was developed by UK startup Zelp, which claims it can reduce methane emissions by more than half. And cow belches, guys, are no joke. In fact, it's a legendary issue for meat and dairy companies under increasing pressure to clean up their supply chains. And when it comes to fighting climate change, there's little margarine for error. That does it for Bloomberg Commodities Edge. Make sure to catch us each Thursday at 1 p.m. in New York time, 6 p.m. in London. This is Bloomberg.